now we know that construction has been taking a while. There's been delays. So plan ahead. If you want to buy property this year, highly suggest front loading it. I mean, I had a triplex under contract for almost 18 months actually, and maybe a little more, and just closed on it in December. So I thought for sure I would have closed on it in the first quarter of 2021. So if you're wanting to get property, do not wait until the fourth quarter to decide that you're ready. Number one, if you're ready, go ahead.
If not just for that reason, but interest rates are already going up, and they're they're set to go up another couple of times. Now, who knows what's really going to happen? I mean, people have been saying that now for 3 years. So, I mean, I think at some point they're going to have to. It's just whether or not they'll keep them there once they raise them, if it slows down the economy, because we can't do that either, especially as fragile as everything is right now. So, who knows what's really going to happen with rates? But I wouldn't bet against rates going up this next year. I think they have to slow down inflation. Well, I guess they don't have to. They should slow down inflation.
Theoretically,
I guess they don't have to. It does make it a little bit easier to pay off, our ridiculous debt. So who knows what they're going to do? But I wouldn't bet against rates rising if I were you. So front load the year for sure because of both of those things.
Exactly. And then I would add too that this is the last year, at least with the current legislation, that you're going to get 100% bonus depreciation if you're going to use cost segregation. That's so much like shuns in there, depreciation with cost segregation. But this is the last year, unless they extend it. And given the legislation, what they've been doing, I don't see them extending it. And it will start phasing out next year. Over 3 years, if I remember right, Ron. Is that what you remember? 23, 24, and 25 or something. That it will eventually you won't have any bonus depreciation. So it's been a fantastic accelerator for me personally in allowing me to grow my portfolio. That depreciation, getting essentially my down payment as a write-off, has been obviously substantial growth.
And on that topic, it's a little bit shocking to me how many people don't know about this, because, for us, this is, but I say that, and then, here I had been in the real estate business for well over a decade when I learned about it.
Yeah, true.
From my CPA, who's going like, what are you doing here? You're getting ready to write this check to the government when you own all of these properties. That's the most stupid thing I've ever heard in my life. So those of you who listen to the podcast and you know about this from listening to the show, you should share the wealth, folks. I mean, I have friends who literally didn't know about this.
Yeah.
And, we just had conversations last week. And they're in the real estate business. Right. So, this is an amazing thing, especially, and look, cost segregation is awesome anyway, but you couple that with this bonus depreciation, it's insane. So you should take advantage of it.
I've talked to accountants of our clients that don't understand cost
have no
segregation.
Idea. Yeah. And even if they've heard of cost segregation, they still don't know about the bonus depreciation. Right.
Exactly. That's true. They'd have heard of it, but they don't know about bonus. I should have clarified that. Yeah. That it's like, well, yeah, we're already doing that, is what they told my client. I'm like, you're already doing it? What? What do you mean you're already doing
straight
it?
line depreciation.
Yes.
Stop lying.
I know. I was dying. I'm like, it was a friend of mine, so it was even more painful. But I share about it on every new client call that I have. And it probably is out of left field for a lot of my clients. They can't utilize a lot of the depreciation yet, but it's like I feel bad if I don't tell them about it. If they don't know and I just didn't tell them, yeah, I feel bad. Even if it doesn't really always fit. I'm like, just for forward thinking, in case one of you ends up going part-time and you can file your taxes as a real estate professional, like just food for thought. And I just spit it out there. So I think it's super important.
Yeah. And, or if you have other passive losses you can write off against, right? I mean, so.
Last thing I'm doing that I'm working on right now in this first quarter. So I'm trying to get more property under contract. I'm selling property, I already mentioned, which I didn't expect to. So that was crazy. And I'm even looking at refinancing one of my properties because it's still at 5.75. It's killer.
What?
I know I should, I'm saying this out loud, but there's a story that I was going to sell it. It's the house I was going to sell when they raised the rents.
I just know everybody listening right now, just their hearts
gave
hurt.
You just sigh of everyone.
Oh. Yeah. You just heard everybody.
It's brutal. So I'm like, well, should I refinance? Am I going to sell that? It just keeps going up in value.
Are you keeping it? Or are you keeping it? Or what are you doing?
It still cash flows well, even though I have like almost 6 figures of equity in that tiny little house. But it still cash flows so well that I'm like, well, should I let go of it? So I haven't decided yet. I've been talking. I even have someone who wants to buy it. Everyone wants to buy that house. Thing's killer. So, and then the other thing I'm doing, I know, right? It was my first house.
Heather just tore a rotator cuff, patting herself on the back.
It was my first house and I plain got lucky. I didn't really know what happened. It got lucky. So the last thing I'm doing is I talked to my accountant and I am setting up a company and hiring my kids. I already talked to them. My twins just turned 12. My oldest kids are 12. And I said to them, okay, you're each going to get assigned a property and you need to watch to see if the money comes in. I'm going to teach them how to do all of it. And I get to teach my kids not have to stress about something myself. And I get to pay them and lower my income, my declared income on my taxes. And I was like, yes. So other people may have already done something like that, but my kids were always too little. So
yes, very cool. That's very cool. We talked about the funding company on here. Did we talk about the funding company?
We did not talk about it.
I mean, it's pretty cool. I'm not going to go into the details on it, but it's pretty cool. So if you have properties that you own outright, one of the things that you could do is start a funding company that lends money to the property, and now it's indebted, so it's less attractive to all of the ambulance chasing attorneys because it is encumbered. So when you make your payments, you're going to make them to a funding company that you own. Obviously, don't call it your funding company LLC, but just another way. I mean, there's some really cool things you can do with companies that if you have good attorneys and you have good CPAs, they can walk you through that. Wealthy people do. Family offices hire the best CPAs, the best attorneys, and they put together structures that not only protect the assets, but also give them the best tax incentives. Yeah. And sometimes the way that you structure something can be good one area and bad in the other. And if you just had everybody talk to each other, you could have structured it really perfectly, right? You could have structured it the right way to begin with. And so as we start this year, I think kind of the theme that we started the year off with was get your financial crap together, put together a personal financial statement. If you don't have one, just email into the show. We'll send you an Excel and you can fill it out. It'll be great. You can keep it. And then you got to look at it on a routine basis. And if you're paying too much in taxes, it's your own fault.
Ron is calling you out.
I'm just telling you right now, if you're a high wage earner and you're paying massive amounts of taxes and you have not reached out to a better accountant who's not just a tax preparer, who actually will help you plan throughout the year, it's your own fault. If you're listening to this show, it's your own fault. So
if you're listening to this show, it's your own fault for listening. Is that what you're saying?
That's what they're probably thinking right now, you jerk. No, it's your own fault because we've said it a million times on here.
I know.
Had CPAs on here.
I know. Crying
out loud. Yes. So get somebody who can help you. And if you go to your CPA and your CPA goes, no, you don't, that you can't do that. Well, it's probably time for a new CPA.
Yeah, get a second opinion. Yeah.
I mean, no CPA knows the entire tax code. No attorney knows all of the, corporate structure laws. And most of them don't know how they interact with, the IRS. And so you need all of those people on your team to be successful.